The major story that I would watch during 2018 is some reversion to the mean in two respects, both of which I think are likely to benefit REIT investors. First, for investors who are looking at REITs within the context of their stock portfolio, during 2017 we saw REITs underperform the broad stock market dramatically, and I would say that was primarily because there was such an aggressive increase in the large cap tech stock portion of the market, and I expect REITs to make up that ground during 2018. And second, for institutional investors who are thinking of REITs as a way of tapping the real estate market, I think again we've seen a pretty sharp divergence in valuations between the private side of the real estate market and the REIT side of the real estate market, and I expect REITs to close that ground. And as I said, both of those stories are likely to benefit REIT investors.
One of the major issues for REITs and real estate in the year ahead is going to be the durability of the real estate cycle. There have been several concerns raised recently, some of which are valid, some of which are not really that much of a concern. The first one to dismiss is just, well, we've been going on for 8 or 9 years, this is getting fairly long in the cycle. That's not really a valid concern because it's not like a milk carton with a due date on it. Real estate cycles don't die of old age. A more valid concern is there's a lot of construction going on. Will we have oversupply? So far, supply and demand are fairly well balanced and are actually below what they are in terms of the share of GDP. That is, we're not really overbuilding the economy yet. So with those issues clear, it looks like a good year ahead for REITs and real estate.
One of the important topics I'll be tracking this year is how investors react to the recently passed tax reform bill. Well, the reduction in the corporate tax rate has garnered most of the headlines. It's also important to note that the dividend rate on REITs has fallen dramatically from 39.6% down to 29.6% at the top marginal rate. That's important because that can dramatically increase investors' rate of return on REIT investments.